Welcome to On the Block. I'm thrilled to introduce Lucas Landolt. Lucas is the managing partner and COO at Lloyd and Partners AG. He's a true pioneer in FinTech. Over the past 15 years, he's been shaking up traditional banking by launching projects that have delivered fully licensed, crypto-enabled banks faster than anyone thought possible.
With a rich background in IT, law and business, Lucas has led complex projects that modernize financial services, making banking more accessible. Today, we're excited to share his insights on how tokenization is shaping the banking industry, both in Switzerland and globally. Hey Lucas, welcome to On the Block. We are really excited to have you here. So you got a pretty unique business that is because you help people open banks in Switzerland. And not just that, you promised to get it done in 9 months. This sounds like a big task, so can you elaborate a bit more about how you do this and how you are able to commit to this promise?
Yes, gentlemen, thank you for having me here. So yes, it's quite a unique business, and it took some time also to elaborate to the market that bank creation is also an option, not just buying or overtaking banks. So we came from the regulatory part where normally lawyers just do the regulatory stuff into a banking application. And we observed that mainly people coming from abroad outside of Switzerland, they don't have any network with providers. And then when it comes to the question how to set up the bank itself, not only the application to the regulator, how do we do it? We created the full stop shop approach within Lloyd and Partners, and it's quite successful.
Excellent. So will you be able to share any success stories with us and with our audience?
Yes, look, we do mainly 3 things. It's the regulatory navigation. Mainly our prospects come to us because they want to buy a Swiss bank. It's still an attractive asset worldwide to have a Swiss bank because there is no country in the world that wouldn't accept a payment from a Swiss bank. So people have the idea it's then easy to come to Switzerland and to buy a bank and then be a banker in Switzerland. What obviously is not that easy, because if you want to buy a bank, then you also overtake legacy, you overtake mostly a business model that is not really working, and mostly also people and IT systems that are backward oriented. When we start a discussion with investors, we try first to check if regulatory wise their business approach would be bankable. And then we show them what are the possibilities to set up the project, with which tools and how the workflow should be. So there are many aspects in a bank creation. It's not only the application, what has overall about 4,500 pages that you have to send to FINMA for a bank, but it's mostly also to create a new company, a new culture, new ideas, and also a new mindset how you drive business. And all this needs to be created. It's not only technology and infrastructure or the operational setup, it's also to bring everything together. So we have at Lloyd and Partners a bunch of consultants that can help and have expertise in all these domains that are needed to create a bank and finally the future team to run the bank. So I cannot share names actually, and that's
from obvious reasons.
For obvious reasons, but I think it's quite also important to say why would we need new banks in Switzerland? Because many of the 236 existing banks somehow reached their possibilities within their business models. Of course, try to transformate. But I think we see a huge consolidation, that we will see also a huge consolidation in the market, because mostly all these banks, they have quite outdated IT, and to meet also future needs for clients, I think they need to transform, and sometimes it's quite not possible. They try hard now for 10 or 20 years and it costs millions, and you have a huge operational risk because you also have to run a bank with the existing clients. In most of the cases that we discuss with investors, it would be easier to create a new one and probably to shift the clients who want to also have new products and new services.
So you think that those new banks are created because there is opportunity to get the clients from the Swiss market, or to maybe to acquire the clients from abroad by those new brands?
I think Switzerland is quite overbanked. We have enough services, banking services, but if you see that 90% of cacao trades run through Switzerland, and there is also a lot of trade finance and financing going on, because I think 34% of worldwide assets are still held in Switzerland and managed in Switzerland. So yeah, here is where the money is. And I think a lot of people, if they want to earn and have revenues on their investments, they are also interested to have it traded or managed here, mostly also for new industries like the blockchain sector. So I think there is a lot of chances and there are a lot of opportunities.
What do you mean by banks are limited by their business models?
Mostly it's about the risk appetite banks have. After 2008, that Swiss bank have discovered that hiding money from tax authorities from abroad is not a business case anymore. They needed to reinvent themselves. They tried to get into new business, or they had to adapt their services, and they were punished and also hold on short leash by the US government, but also by EU regulators. They don't have really an appetite on high risk clients. So they try to have a lot of assets, but low risk. And so they are limited also on the possibilities to generating revenues, because if you see the interest rates, actually the Swiss National Bank just decreased the general interest rate. So this is not anymore a banking business. So they need to reinvent themselves. And the only chance that we see is being specialized somehow on some branches, industries, and helping them as a service provider what they would need.
So you actually think two biggest obstacles for banks to transform and grow are either limitations within their current business models or the tech stuff, right?
And I would also, yes, I confirm, but I was also mention a third thing, and that's the mindset. I think a lot of Swiss bankers, they come out of the 80s, 90s, where the financial markets were completely different. And if they meet now all the young generation that is not really linked to private banking, they are not interested to go to drink a coffee with a banker. They want to have apps, they want to be mobile, and they want to have just the transactions done. And the rest they are not interested to. I see that also with my kids. They are not interested in having really a relationship with the bank. They see them as a service provider, that's it.
And regarding the new business models and new services, Lucas, you are known for preparing these new banks for the future of finance. And we at SPL Software, we also do believe that like cryptocurrencies, tokenized assets present an incredible opportunity for the banking sector. What do you think of tokenized assets?
I believe that's an important part of the future. And I also believe that the approach just of crypto banking or digital asset banking purely will not have any future. If you see that Switzerland is really an asset management country, so nobody would then tell the clients that they should invest a lot of money into digital asset or cryptocurrency. But in the future, we are sure that if you cannot offer digitalized assets, you might have a problem. And then people will go abroad to other countries where probably also the regulations are a little bit less strict than in Switzerland. And we will lose a lot of clients within the new generation.
Okay, and I think many see tokenization of real world assets as a game changer. We had Larry Fink, CEO at BlackRock, write this latest investor letter that every stock, every bond, every fund, every asset can be tokenized. Do you think so as well?
Technically spoken, yes, it's true. And let's be honest, the concept of fractionalized ownership, it's not new. It's probably the approach is new, but it's not a new thing. So yes, I believe it's possible, but the question is, would it be worth as a bank to be one of the early movers? Yes or no? I don't know. I think to prepare yourself and to make yourself ready as a financial intermediary is really important. But in Switzerland, there are still some regulatory hurdles. So if you see the situation in Switzerland, there is none of the banks that held the digital assets on their balance sheet. This would be really interesting for investors, for family offices, and for wealthy people, because they could use the whole value chain to go further and to invest further. And this is not actually possible. And I think that's really an important move that also Swiss financial intermediaries should go on, and probably not the first stage movers, but prepare themselves to at least be ready for the second stage.
So Lucas, so you think that banks are not the first ones, the first actors in the ecosystem who should build offering around tokenized assets?
I don't know. Look, tokenization, in my understanding, the main goal was to democratize the access to assets. Also, the idea based on blockchain was always to avoid the man in the middle. So the concept we have with banks is the centralized player in the middle that always links buyers or investors with some who want to sell something or who need investment. And I'm not sure if the concept was really made for that banks can run this. I believe one of the reasons why this came not to the ground till now, because the concept was completely different. It's like you would bow the two ends of the rainbow and try to put the things together. But I believe if banks would see themselves as financial service providers, and they have started to do that just to offer services towards their clients because they have them onboarded and identified, I see there a huge chance. But it's not only just to sell financial products or to trade or to do the classic banking work. I think this is also the named mindset change or challenge that I told you before.
Mm-hmm. But it seems that banks can kind of stay as the entry point for clients that want to use both centralized kind of banking or centralized financial system and also take advantage of the decentralized world. So in case that bank wants to allow its clients to trade crypto, to invest in real world assets that are tokenized, we still need to consider and decide how to allow banks to prepare their infrastructure to allow the entry of their clients into these two worlds, not only the old world of traditional finances. Are there any hurdles and any guidelines already drafted in the Switzerland that guide banks how to prepare their infrastructure?
No, they aren't, because there is no main concept. Look, FINMA, the Swiss regulator, is really technology agnostic. They tell you, look, you can bring everything as long as you demonstrate that you're compliant. So it's not on the regulator to tell the banks how they should integrate new business concepts. So I believe it's really on the ecosystem, on the industry, and also on you as a software provider, on us as consultants, to give some new ideas that are applicable, that are regulatory-wise compliant. And I think also one of the big problems is that there is no complete chain that is easy accessible. So every step in that tokenization process and also then bringing the tokenized assets to the market is also fractionalized and segregated. So if someone would be able to bring all these players together and make it easy also to tokenize assets and bring them directly to which market ever, I think this would be adaptable for a lot of companies and persons. And if you talk about real world assets, when I see how many expensive cars, art, wine we have here in Switzerland, of course, probably the owners, they don't need immediate money, but once when you have a change of generation and when the new generation inherit all these assets, they want to see money. So they have the problem, how can we sell? Should we go to Sotheby's or what should we do? So I think if you can offer the whole chain as a financial intermediary, this would really be an added value to the public. And give...
Yeah, for the young generation, I think the biggest issue is the very low liquidity of those real-world assets. Yeah? And that's why we think about the tokenization, this fractional ownership that allows for easier sell and easier transactions of those assets.
Yeah, but see, I did also some pre-checks for projects regarding art or cars, valuable cars. Look, let's take Lamborghini Countach. So, of course, you can fractionalize virtually the Lamborghini, but who can drive it at the end? If you have 1,000 owners, who will have it in the garage? If you have an art piece, would it be somewhere where you have a camera and then you can put it on your screen for today? Or what is then the concept? Mostly on these real world assets, it's really people want to own one thing. I believe just to make money, it's a good idea, but then to have it or to share it, so the real world is not meeting the needs of the public. Because look, if you and me, we have just 1,000th part of a Lamborghini, we don't have a Lamborghini, so we can just look the picture every day and that's it. So what is it worth than to be owner of 1,000th of 1% of a Lamborghini, for example? So I think we need also to have real use cases that are really usable in the real world. And first, I think we need to solve these problems and then give also the technicalities and the possibilities that are also regulatory-wise sustainable. See, we have some companies in Switzerland who already perform a lot of tokenization, but as the regulators worldwide are not ready yet, so the investors or the owners, they would not know if the chose solution, not only technical, but also with the financial construct behind, is really regulatory-wise sustainable or not. Or if this comes then on the blacklist of the FATF and say, yeah, this is only for money laundering, because they mostly use also companies abroad in the Caymans or somewhere. So this cannot really be sustainable. We need really solutions on the ground where you can control the full chain.
Mm-hmm. Sure. That was the interesting kind of observation, because indeed blockchain doesn't solve the issue of sharing the assets. Of course, it makes it easier to do the transactions, to sell and to change the ownership. But at the end of the day, if you want to just own the thing, blockchain will not help yet that much.
Look, I give you an example. If you give your partner a birthday gift, just a token of a Louis Vuitton bag, I don't think she will really be excited, because
she will not be happy at all.
Yeah, she will not be happy at all. She will say, yeah, that's nice, but that's useless. If you give me a share of Louis Vuitton, a Moët Hennessy, okay, that's a different ballgame. But just to have a fractionalized part of a Louis Vuitton bag, how would that make sense? So the main idea is good, but we need some real use cases. Therefore, we need also the help of the whole ecosystem to bring these use cases to the ground.
True, and the more owners you have, or co-owners, the more control, or the more oversight you also need to put in place, because there are regulations that require to do the KYC over the users that take part in the tokenization process. So it's another kind of hurdle that needs to be done in this process.
Yeah, and also the cross-border problems will also apply, because one of the ideas is also to make these fractionalized parts accessible all over the world, because you want to reach a bigger number of investors. Okay, you own a part, I own a part. What if I get bankrupt? And then the debt collectors come and they take over that part. There are many, or what if I die and my kids will try to divide that part into 4 parts. So there are many questions in the real life that are not answered yet, that we really need to play and go through with real use cases. And once when this takes over and also the younger generation say, hey, that's cool, that is really what we want to have, and then it's hip also to jump into these kind of ownership, I think then we can adapt it, and then it will also be a business case for the banks, the established banks. But you're right, they need to prepare now for what will happen in the future. It's too late when it's hip, then the chicken run already happened. Then you just can say bye-bye money, bye-bye revenue, and that was it.
Yeah, but gentlemen, I can think of a few real cases for sure. Owning 1% of Lamborghini, it's like you're in the party and you can say people around, hey, I'm a co-owner of Lamborghini. Isn't that like a real case? Come on.
Yeah, but look, if everybody gets a key, if you 2,000 parts and everybody gets a key, then okay,
it's not yours anymore. Yeah.
you can come with the key. No, I'm just joking, but I think there are solutions, and probably not every non-bankable or real-world asset is really meant to be fractionalized in the sense of ownership. But of course, I agree there is a huge potential. And people want to invest. And if they don't have a lot of money, they want to invest anyhow. So just can give you the example of my eldest daughter, 19 years old. She sent me time to time some link to say, Dad, it's worth to invest here, to invest there. And she don't have a lot of money, but I like the mindset. She's already thinking in a long-term way. And I think the new generation, they know way more about financial products, and they are more interested because it's more visible. Before it was just an enclosed, it was many club deals, and if you didn't have $1 million on your account, you couldn't access these and those products. So I think I really like the approach that the access to assets is more democratized.
Yeah, and on the serious note, what do you think about private jets? Because this business model exists for years now, and this is a very expensive asset that's probably cost shared in most cases or in many cases. And you don't need to keep that in your garage. You don't need to use that every day. You probably need it like few times a month. So there are several people who can actually own it, use it, and wouldn't that be a real case that's applicable?
Yes, it would be a real case, but that's funny that you mentioned that, because I recently saw or checked a channel at Instagram where they push empty flights with private jets to say you can have for 10% of the price, we will go from London to Paris at this and this date. And you can buy a ticket because we have to fly there anyways. So I think there are new business models evolving. And of course, to share or just to lease or to have tokens that gives you the right. This is, for example, Jet Aviation in Switzerland is already doing this. And if it's not important to say this is my plane, then it's really fine. But I think the side product, like to give tokens out of the empty flights and try to fill these flights up and give people the easy opportunity to jump on a private jet, this is also an amazing new evolvement that I really like. But you need to monitor the market, and you need to have an open mind and just check what's going on. And that's also one thing that we try towards our prospects and clients to say, let's take a look around. And it's important to be linked and have a good network, because with all the informations every day, you cannot monitor everything. But once when you have heard or you're linked to such an opportunity, then probably you're the right guy to do a business case out of it. Or SPL will write the software where business jet owners can easily sell the empty flights on their way back from a place. So these are really exciting new models and business opportunities that also banks, because they have a large network of clients, could offer by side of their financial services as a service provided towards their clients. But they don't doing that because they say we are a bank, we are just handling money and that's it.
Yeah. Lucas, Switzerland, I wonder how Swiss banks approach stablecoins, CBDCs. Do you think there is anything specific in their strategy that other banks should look into and adapt?
Not only the banks, but mostly also the regulatory approach. I think that Switzerland is really an open country also for blockchain and crypto technology, is also thanks to the politics, thanks to the open ecosystem that we have and to the economy, and also that the regulator allows you to elaborate new things and tell you, okay, if you have a good business case, if you can show that it's compliant, you just can come up with. And I believe we are just in the beginning. We are not, some people tell me, look, we are at the end, this is, everything is over. No, I think we're still in the beginning, but learning from the banks, sometimes, I'm sorry to say that, sometimes if you look on the banks, you can just learn what you shouldn't do. So I believe that if they come back to their basic mission, to serve the clients, to probably specialize themselves, and there are some amazing banks in Switzerland, just specialized on a certain sector or just serving a certain industry, I think this has a future. But doing universal banking or retail banking, this comes to something that just everybody can accept and can expect also from the banking industry. So what to learn? I think more on the regulatory approach and seeing what the blockchain and fintech industry is doing and then take the chances. Is like sometimes you need also to force. I don't know if you know the story about Wells Fargo. They were a transport company before they become a bank. And then when in America the railway was constructed, their business model was dead. So they just thought, okay, we have the stations everywhere in the world, we have the lockers, the boxes, and people trust us. They just held the safe boxes and transporting assets from A to B. And they reduced their business to that model, and that's why they're a bank today. And probably, I think we will also have adapters coming out from another business and helping within the disruption that we have actually in the financial industry. And I see there is a lot of innovation in Switzerland. And if other banks should look on something, I think they should look on the innovation that happens in Switzerland.
Okay, and what's your take on the Swiss National Bank that's done this pilot on wholesale central bank digital currency that's used for like settlements of tokenized securities transactions?
I believe that it was important. There were early adopters because, like I said, there are many innovators here in Switzerland and they pushed hard. But actually, I believe they were too early because if just Switzerland integrates CBDC and all the other countries are not at that stage, I think it's a little bit helpless. So the goal actually should be to hold on and just to transform, and probably also help other countries, important marketplaces, to help them out how to regulate CBDC, because settling and international cross-border settling is still one of the biggest issues. The SEPA area is okay, but just if you look on Asia or Middle East or US, we still have a lot of settling issues and a big rupture into the different payment systems. So CBDC I believe, is really the future. But also there, we need use cases that goes outside of Switzerland. I know also that the Bank of International Development, they have some nice projects, but they are still in an early case because honestly, the actual banks are not really interested in that. Look, they own Swift, the system, they own many of these systems. So what would be the interest of the existing banks to go out in an easier and cheaper system where they earn not so much money and when they go out of control? And that's also a point. If you go into new technologies like blockchain, probably you're just one part of the ecosystem. You're not the center anymore. You're not in control. And I still believe that the biggest asset in Switzerland that the Swiss bank holds is not the money, it's the behavioral data of the client. And that's also the reason why open banking is not moving forward, because they save these data for themselves, but unfortunately they are not really using it and producing some new products and services towards their clients and attract new clients. So there is still a lot of work to do.
So that's interesting because we are talking only about banks so far, and I also wanted to discuss, to talk a bit more about the fintechs and how hard or maybe how easy it is to open the fintech company in Switzerland. What are the regulations that need to be obeyed and prepared by such a company? Especially in Switzerland, that is very crypto-friendly. Yeah?
It is. Look, let me start with an example or with a question for you guys. What do you think is the base color of a zebra? Is it black or white?
I heard it's white.
No, it's the base color of a zebra is black. And the white stripes come from deficit of melanin. And if you look on the hooves, they are black. So the main color of zebra is black. So what I want to say, it's whenever I come up with that question, people think it's a question of belief if a zebra is black with white stripes or white with black stripes. But the truth is, it isn't. And it's the same with FinTech. FinTech has two parts. It's Fin for finance and Tech for technology. And we have, I would say, in abstract, two problems. Most of the companies in Switzerland or also in Europe, what I observe also worldwide, they have technical solutions for some problems in the financial world. What is quite nice, but the money you get with the fin part of the fintech. One of the points is still hard to elaborate a fintech in Switzerland because you need a fintech. It was named 2017-18 when the Swiss regulator built that, the Bank Light license to get an easier license. But compared to the other licenses in Europe, if you look on the e-money license or the payment licenses you have worldwide, the regulation is still high. And the requirements for a company to get a fintech license is quite high. And that's also the main reason why actually in Swiss politics this is discussed. And I think the Swiss fintech license will be redefined because with too much regulation, you kill also the innovation. And it should be easier to go fast to the market. And also, if you just come up with a technical solution, it's not sufficient. If you just come up with a business idea and you have no idea how you can do the operational complexity, you will never get there. So I think it's important to create a bigger ecosystem where every partner, and we see ourselves also as a partner in that ecosystem that helps people to bring their business cases live and also to orchestrate the best and easiest solution and to facilitate also their integration to Switzerland, because I think the political stability and the economical stability in Switzerland and the reputation we still have in Switzerland, it's a great ground to do business outside, and Switzerland is accepted worldwide. So if you start from here, you can quite access every financial market on the world.
And if we are talking about the fintech that also wants to not only provide kind of financial services like banking or neobanks, but that also want to allow for managing digital assets. Are there any additional regulations that need to be obeyed by such a company?
Yes, they are. And there are also some upcoming regulation. If you see that in Basel III, they are talking about also regarding Basel IV, the overall financial market regulations to put the risk weight crypto assets up from out to 1250, 1.25%. So this is also not only a technology aspect, but it's also a question of how much equity you have. So there are many aspects. And I think mostly this fintechs that just offers really cool technology, it would help if they could collaborate also with audit company, with consulting company to to bring light in the whole aspects, because it's not only how to integrate, it's also how to adapt the existing workflows within the bank, within the financial industry, and still being compliant. And in my experience, this is one of the biggest fears. You have many excited persons in the banks. They say, yeah, there are some new cool features and we should integrate this fintech. And then compliance or legal kicks in and say, but guys, how can we do that compliant? How we can show the regulator and the auditor that our workflows are still in line with the rules and regulations. So there is also some creativity needed to adapt the existing workflows to make it possible to go quicker to the market with new technology. And we need adapters, we need integrators, and we need also open-minded people, mostly in the management of the banks or of the financial intermediaries. Look, I just give you an example. I was 2 years ago at the Swiss banking conference where the chairman of the board of Julius Baer said, yeah, crypto, this will not come. Sorry, my friend, 74 years old. I really accept all your experience you have, but you missed the point here. So the question is not if cryptocurrency or digital asset will come, it's just when and where and how much. If you miss the train today because you're from another generation, probably your bank is dead in 1 or 2 years. Come quick and massive, and the new generation of bank clients will push towards these services. So yes, there is a lot of things to do, but the pressure is not high because the actual banks and financial intermediaries, they still earn enough money. So as long as there is no pain, there is no transformation.
Yeah. And what's your take on DeFi-like models within banks? Should they really go after that, build new services, new solutions around it?
Look, that's the same thing with what I told you about the two ends of the rainbow. So DeFi is really the idea that you don't need a man in the middle. So why should the bank jump into that? These are the wrong guys. I believe if banks or banking groups see themselves as part of the ecosystem, probably they should create or participate at a DeFi provider just to be part of it, just to be linked of it. But I don't see any chance, also cultural chance, that banks will integrate these services by themselves. And I also believe it's a complete different mindset and strategy. Of course, they should participate, but put these things outside, create or do like a new company or share with others, but be part of it. But integration into the bank, I don't see any chance because the mindset is so different, and they would also fight against their own business models. Because if they do a great job in DeFi and they adapt this to a lot of people, what should the bank then do in the future?
But isn't it like the more market share they can use? Shouldn't they invest in models, maybe even outside of central organization?
It's a question how you see ecosystems. If they see themselves as a part, just a part, and they can I believe there could be a huge contribution from banks because they have a lot of knowledge, a lot of network, they know what the client needs. But I think it's important that others push these concepts forward because otherwise this will not survive because it's always hard to start. And just an example of transformation, none of the jar builders, horse jar builders, ever made a car at the end. So all these jar builders, they never survived. They died with their horses. And all the car builders, when the motors came up, were new companies. And also, if we learn from other industry, like the music industry was disrupted from telecom providers or from mobile phone builders like Google and Apple. So I think in the need that the community has, we shouldn't trust on banks as long as they don't want to participate in the ecosystem. If they are part of the ecosystem, be welcome. So more than welcome.
So what's your take on DeFi in general then, outside of banking?
It's a huge chance, but the problem is there are huge risks because you have not really established controlling layer. And I would say technology is today used for a lot of scams and fraud and all these parts. So if you can put DeFi really on a securest layer and bring authentication of the two parties in DeFi on another level that is not really linked on central authorities or countries, then I think it have a huge chance. And I also believe that a use case for a specific community, this is what Facebook tried some years ago. I still believe that use case could be applicable. And if you have a common view on how DeFi could work in a smaller environment, then it can be amazing because it can speed up the processes. And this would be really helpful, mostly also for areas in the world where centralized banking is not really common or will never be common, like what I see in Africa or what I have observed in India or even though in Asia. So I think it can be an important part also to give access to people to financial services where banks are not really existing or are not reliable because of politics and regulations.
So Lucas, let's imagine that there is a company, there is a DeFi company that's already incorporated in Switzerland and already has some clients. How easy for such a company is to enter other markets based on the regulations that are already, or the requirements that are already met by that company on the Swiss market?
I believe it's relatively easy because if you're compliant to Swiss regulations, you will be compliant everywhere. The only problem is that somehow you could be overregulated, but key is here to be linked and network, to have a great network. If you start out of Switzerland and go to several markets, the acceptance, in my experience, is really high. So it's a good point. But you should already, when you start your business in Switzerland, you should already have a vision and in which jurisdictions or area you want to grow and already plan that in. And if you have your central office in Switzerland, you can have in every jurisdiction or area, you can then open a subsidiary and it will work really well. But the question is, there are some countries or areas where we would recommend really probably to check a collaboration. And most of the business owners, they think just to have their own network. But I think collaboration also for growth is key because then you can use already established a network or organization operational setup. And I think it's quite easy compared to other countries.
So basically, not the reputation is just the biggest asset of having the company set up in Switzerland, but also this network and the readiness to roll out the operations to other markets.
Yes, and also that technology-wise, we are linked worldwide because as a small country, not part of the EU, we always have invested a lot of money to be linked directly to every financial market worldwide. And people can use this. And also, politic will help you to enlarge your business, to bring your business to growth. So, yes, I believe it's a good starting point because we are a small country and with a huge network and a huge acceptance worldwide.
And have you helped in the opposite way? So the companies that were already mature on some markets, trying to enter the Swiss market?
It depends what they want to do. I think one of the biggest challenges is really is regulations. If you look on financial intermediaries, then you have to comply with your worldwide network on Swiss regulations, and sometimes this is too much. But then also probably a collaboration with an already existing Swiss company or Swiss financial intermediary would be a good idea. So what we try to do is when we have suspects or prospects coming to us, we try to go a step back and say, okay, you want to create a bank or buy a bank. What for? What is really your business case or your need? And is this really what you need? Do you really need to be a bank owner for what you want to do to enlarge your business? So I think it's really important because the world is changing and turning so fast, just to go a step back and say, okay, probably if this was the right solution this year, next year it can change. And probably collaboration will be easier than create your own company, whatever. So I think the world is open, and just what you need to have is find partners who have this openness and also consultants who have this openness to lead you on the right way and not just selling you the products they have in the pocket, and that's it.
Perfect. Lucas, I wanted to ask you if we could play a little game. We have prepared 5 fire questions for you, and we would like you to answer these just with one word if possible. Would that be okay?
Let's try, of course.
Absolutely. What's the future of banking?
Being better for clients,
Blockchain is
a great opportunity.
one word that defines the Swiss blockchain space.
Crazy.
Who is your biggest influence?
The creator of Bitcoin,
What's the most underrated technology?
I think, is the mobile phone.
Okay, interesting.
I can tell you why. I
Yeah.
read with or I do 2 things with my team and environment every year. We read again the white paper of Bitcoin, to what was the basis when Bitcoin was created. And the second thing is we have a look on the video when 2007 Steve Jobs announced the iPhone. Just to remind ourselves how the world was before the iPhone and how the world was after the iPhone when he introduced really the smartphone. And this changed our world completely.
Yeah, it was really interesting. Thank you for tons of knowledge we need to process now.
Yeah.
Steve Jobs said, we don't need banks, we need banking as a functionality. And that's also why I believe that the mobile phone is one of the biggest game changers.
Interesting.
Yes.
Thank you for that.
Thank you very much for having me. I hope it was okay. But for me, it was really interesting talk. And I really hope that also all the viewers of the talk can take something out of that. I try also a little bit with my team to think out of the box and also to provocate sometimes. Not every bank lawyer and banker will kiss my feet. I can guarantee that.
Thank you so much for listening to this conversation. I hope you enjoyed it as much as we did, right, Dominic?
Of course. And before we let you go, remember to stay on the block to stay ahead.
Woo!